let's get started. Thank you everyone for taking time out of your day. So again, if you have any Q&A, ask the questions down below at the end of the presentation, which I expect to be done by 12:30. I'll open up Q&A for 15 minutes up to 12:45. Okay, so thank you everyone for coming in online. Some of you we met over the weekend where we were attending at the Money Show from Friday and Saturday. So thank you again for coming on. So who am I? I'm Alex Wilson, owner and broker record of Remax Wealth Builders Real Estate. Been selling real estate in Toronto for over 15 years. #1 Remax agent in Canada for individual transactions in 2022. #1 Remax agent worldwide. Sorry, not #1 worldwide. Number 11 agent worldwide. Inducted into the Remax Hall of Fame. Awarded the Remax Lifetime Achievement Award at 35, and awarded the Remax Circle of Legends Award by 40. I'm currently 41. But none of that is relevant to you. What is relevant is investment success, and that's what we're showing and how to invest. And that's where I've turned a deposit of $39,300 into a $17 million real estate portfolio and growing. I just recently bought a building, which is going to house our office. So that's not included in the analysis. But the strictly investment properties that I have no owner occupied in, these are all investments, all leased out. It's 15 condos, High Park triplex and apartment building in Hamilton. So this is the portfolio here, and why I show this to everyone and anyone that's been on my calls before is that I want people to get in an investment mindset. And the true way to build wealth in real estate is holding real estate over time. So my current market value of my portfolio is just over $17 million, all strictly investment properties. But there are definitely mortgages on those properties. So it's not like I can go to the bank and get $17 million a day. No, the bank takes money from me every month, but I'm okay with that because the money that they take from me is actually being funded by the tenants that live in my property. And the beautiful thing is, if I look at the value of my portfolio over 30 years, and it's just a very simplified model, if I look at the value of my portfolio over 30 years, my portfolio would be worth over $42 million. And at that time, my portfolio would be fully paid off. Why is that? Well, mortgage amortization periods run for 30 years. So over 30 years, the tenants that live in my properties pay those properties off. And then if I calculate just a very, very conservative 3% compound annual growth rate, my portfolio in 30 years would be worth 42 million, free and clear. And someone else paid off all the expenses on the property. And why do they do that? Well, I provided a roof over their head. I took the risk of maintaining the property, carrying a mortgage on the property. And what did they do? They provided me with rent for that shelter, and that's fully paid off in 30 years. Kyle on our team, Wealth Builder, he's licensed in Ontario and Alberta. Again, if you're at the Money Show or other webinars, you've definitely heard from Kyle before. He's been investing in real estate from the same timeline, 2012. He's owned 6 properties. Previously, he worked at Lotto 649 and Lotto Max. He actually ran the lottos, and a crazy stat. So this is a stat, government organization, they did the research. 34% of Canadians are relying on winning the lotto to fund their retirement. And on myself, Kyle, and Nish, who I'm going to introduce this slide next, are all very passionate of showing people how they can build a real estate portfolio that acts as a pension fund for them to fund their future retirement. So they're not relying on the lotto or a company or the government to take care of them. If you make these moves now and apply that, real estate will build you wealth over time. You can take care of yourself by owning these assets. And just alone, last year, he helped over 130 people from across Canada invest in Calgary real estate. And he's turned his initial $38,000 deposit. We bought in the same building, and he's turned that into a $4 million real estate portfolio. And here's his portfolio. And he's also just recently added 2 additional Calgary properties to his portfolio. Ourselves, our entire team, myself, Kyle, and Nish, who we have here next, have combined to invest in 15 properties in the Calgary area since 2019, and we're continuing to invest. Nish himself, he's been a licensed realtor since 2020. Prior to that, he was 22 years in a corporate job, but he was a COVID victim in that COVID, he was in an environment where his company went bankrupt, and he learned that all that money that was put away to take care of himself and other employees, the company could no longer take care of them. They're bankrupt. Your pension obligations, everything like that, those aren't protected under bankruptcy proceedings. You're actually far down the totem pole when it comes to protecting your paid in pension funds. That is it. You are on a creditor list, sorry, but again, you're behind many other different lenders. So he saw the value of investing in real estate and how we can really build an investment portfolio. And he sold over 100 Calgary investment properties in 2022, in addition to his resale business. And in the span of 18 months, he quadrupled his investments by leveraging his existing properties. And now he has a portfolio of 4.5 million. And here is Nish's portfolio here. Again, we show everyone our portfolios so you can show that we're actively investing in areas that we believe that you can really build wealth in real estate. And in 2022 alone, we helped over 350 people from across Canada invest in Calgary. And it's actually more than 10. We've done 15 condos, properties across Calgary for the team. So where our money's going, our money is where we're telling you where we think you should put your money. And if you notice, I've built a large portfolio, and part of that is I've used my home to create a pension fund. And what do I mean by that is if you have a property and you've owned a property for 5+ years, it's probably gone up significantly in value, even with prices that have gone down in some markets. Calgary is not one of those markets that continues to go up, which I'll talk about a little bit further. But if your property's gone up in value, that's great. But the only way to tap into that is you could sell the property, which doesn't really help you because there's transactional costs related to that. And there's transactional costs to then buy your next property, which would then cost the money that you just sold the property for, unless you're moving into a lower cost environment. Or what you can do, and this is what I've personally done, is you can take a home equity line of credit out in your current property and use that to invest in other properties. So if you've been diligent, your property's been going up in value, and you've been also aggressive in paying that down, that's good. But what you can do is then, if you use a home equity line of credit, that interest is then tax deductible, and you can use your house as a smart investment tool to grow your real estate wealth. And instead of having one property go up in value, you can have 3 or 5 or 10 properties going up in value at the same time. And again, if I look over a 30-year period, all those properties be paid off. Now, if I only had one property, well, that's great. Well, in 30 years, which is the roof that I live in my head over, the property that I live in, that property's gone up in value. But again, that's my only asset versus having 10 assets that are paid off. It's what I've done, and that's using the value of something that's scarce, time. There's only so much time you have, and another scarce asset, real estate, because there is only so much land and they're not building any more of that. When you apply those two concepts together over a long period, you can build significant wealth. And what I have on the slide here, for each $350,000 condo, that will result in $24,000 in annual income in your retirement years. I've worked out the math. Basically, what that is that I look at what the value of that condo would be in 30 years at a compounded 3% annual growth rate. I adjust for inflation, so that's $24,000 with today's purchasing power, and then I apply a rate of return on that, and a 5% rate of return on that, you'd be able to pay yourself a dividend every year of $24,000. So if you start adding on those properties like I showed here, if you have $1 million real estate portfolio, which is just a little less than three $350,000 $350,000 condos, that would allow you to pay a 5% rate of return in today's purchasing power of $70,000. So you'd have yourself an inflation adjusted salary that you can pay yourself every year of $70,000. If you had a $2 million real estate portfolio, you could pay yourself $140,000 in 30 years. $3 million, $210,000 a year every 30 years, and just goes up and up and up and up. And that's the value, again, of owning real estate, holding it over time, and having someone else pay down the expenses in the property, that being the tenant of the property. Now, that's all and great, but now you got to find, where do I invest in that property? Where do I find that property where it's going to be cash flow positive? That can then, it doesn't cost me any extra money. There's someone else paying down the property. And that's what brought us to Calgary. So when I first started investing in real estate, was in Toronto, and that was in Kyle, the same time, above the same building, at Queen and Gladstone, called the Carnaby, 20 Minnow and Macon Lane. We were able to buy 1-bedroom condos for $260,000. And I could buy that property with 10% down. With 15% down, which resulted in that, for Kyle, $38,000 deposit, for me, $39,000 deposit for the condos that we picked. I can't do that anymore in the GTA. And does it mean that I think the GTA is a bad investment? No, I still expect the GTA to continue to appreciate, but my entry level to that investment opportunity, the capital is quite large. Now I need over $100,000 to get into these properties, investment properties, and I won't be cash flow positive. I'll be negative $1,000 to $2,000 per month. So where are my opportunities? Where can I do this? And this is what brought us to Calgary, because I can do the things that I did 10 years ago in 2012. I can do that in Calgary, and that's where I see the future of Calgary, and it has a long runway of growth. So why Calgary? So when I first started looking at Calgary in 2019, frankly, I didn't know much about Calgary. I knew it was in Western Canada. They had some ski hills close by, and there's oil and gas. And that's all I knew. Didn't know, never been to Calgary before. So I started doing my research. Found out it was the #1 most livable city in North America for 2 consecutive years, 4th most livable city in the world, top 5 of the Economist Intelligence Unit's Global Livability Index, located in the foothills of the Canadian Rockies, loads of green space, and the key thing, 2nd lowest cost of living of Canadian cities and 9th lowest in North America. You do not associate affordability with cities like Toronto and Vancouver, but Calgary is affordable. This was interesting to me, so I looked into the city more. So first of all, if I'm investing in real estate, essentially I'm investing in roofs over heads. And if I'm investing in roofs over heads, I want to make sure that the population is growing. If the population is growing, that means they need more roofs. That means they need more condos, more single family homes, more townhomes, more duplexes. So I looked at the population growth of Calgary. So from 2019 to 2020 grew by 44,000 people. 2020 to 2021 grew by 34,000 people. From 2021 to 2022 grew by 29,000 people. Even during COVID years, the population of Calgary was still growing. Also, Calgarians have money, which means that there is the disposable income for the prices in the area to grow and for the rental values to grow. So Calgary has the highest millionaires per capita of major Canadian cities. Calgary also represented the highest wages and salaries per employee in the country at $66,000 in 2018, and that number has only gone up since then. So they have positive population growth. They're paid the highest wages in Canada, and they have the most millionaires per capita. So they have money, and the population is growing. Things are getting more exciting for me. Then I looked farther. I'm okay, well, that's what's happened in the past. Let's look what's going to happen in the future for population growth. Well, Alberta's population is set to increase by 48% over the next 2 decades by 2043. That's double the rate of Ontario is going to grow. Ontario is going to grow by 24%. So Alberta is going to grow by twice the rate of Ontario for population growth. And the population will actually jump by over 1 million people, a net swing compared to British Columbia. So Alberta will actually be larger by population than British Columbia by 2043 as well. And Calgary, being the economic capital and population capital of Alberta, will get an outsized portion of that. Their population will grow by 62.5% over 20 years. That represents 1 million additional people moving to Calgary. That means we need that many more roofs over heads over a 20-year period. And we're seeing that happen. So that's what's happening now, and we're seeing where these people are coming from. We're seeing that not only is Alberta getting people from immigration, but it's also getting people from other provinces. Because remember that affordability word, second most affordable city in Canada, ninth most affordable city in North America. So not only are they growing by international immigration, they're also leaving. People are leaving unaffordable areas like Toronto and Vancouver and the greater areas surrounding those, and moving to Alberta because they can make the same amount of money or even more money. They're taxed lower, and their cost of living is significantly less. Alberta has a long runway to grow when we look at the statistics. And we're very bullish on the outlook. Well, what about money? As I said, 2019, when I first started investing, before I started investing in Calgary, all I thought of Calgary was it's got some ski hills, it's in Western Canada, and they are in oil and gas. Well, they have a very strong economic engine. They're the 4th largest economy in Canada, behind Toronto, Montreal, Vancouver. There's Calgary. The economy of Calgary is actually larger than entire provinces. It's larger than the province of Saskatchewan. It's larger than the province of Manitoba. So they have significant economic heft. They also have the second most head offices in Canada. They have the second most head offices in Canada, right after Toronto. So it goes Toronto, then Calgary for head offices. They're also going to lead Canada in economic growth in the future. So again, looked at what happened in the past, and I'm looking forward to the future. So they're leading Canada in population growth, and they're leading Canada in economic growth. These are two forces which will lead to higher prices today and the future for both my real estate values and for my cash flow, for my rental values. So then that's when I really started getting excited about investing in Calgary. Adding jobs. Alberta has over 100,000 jobs open, and they're punching their weight on their adding the jobs per capita. So Ontario added more jobs than Alberta. Alberta was number 2, but when we actually extrapolate that in regards to per capita, Alberta wins by a significant margin. So they're adding significant amounts of jobs for all these people that are moving to those provinces, whether it's from a interprovincial migration or international immigration. And they have money. So with oil and gas, which we're going to talk about in the next slides, the diversification away from oil and gas, that's what Calgary's done. But oil and gas is the backbone, and that helps provide income for the province and allows them to run surpluses and create a favorable tax environment. Alberta plans to spend their $13 billion surplus. They ran a $13 billion surplus last year, and they're using that to pay down their government debts. They're also forecasting surpluses for 2023 and sorry 2023-2024 budget year and 2024-2025 budget year, but that budget is based on $70 oil. When I listened to the radio yesterday, we're at $89 a barrel of oil. So even when they hit this $13 billion surplus, their forecasts were far lower than that number. Expect far lower, far higher budget surpluses in the future for Alberta, where they continue to pay down their net financial debt, which is already the lowest in Canada, and then allows them to do things and create that favorable investment environment that allows them to diversify their economy, which we're going to talk about next. So Calgary has diversified away from oil and gas. So where the opportunity of Calgary was created was in those years, 2014, 2015, 2016, the price fell out of oil and you have mass layoffs in the oil and gas sector, and investment was pulled from the oil sands. There was no more investments being made in the oil sands. So you have mass layoffs and a steep drop in demand for housing in Calgary. And that stayed like that for a long time. There was a big rain cloud over Calgary, and people lost a lot of money in Calgary, and it just continued to depress the real estate market, but it stayed depressed for too long. What we saw after the decrease in those prices was the province and the city made a strong effort to diversify away from oil and gas. They wanted to get away from that typical boom and bust cycle that they have been known for. Well, I just showed in the last slide, look at those surplus numbers that Alberta is bringing in. But guess what? When I get this many times when people talk about Calgary, like, well, what if oil goes down? Well, it doesn't matter, because the job growth that's happening, all those jobs that I'm discussing are not in oil and gas. Even at the current oil price levels, they're not making new investments in the oil and gas area. They're not making new investments in the oil sands area. The people that were laid off in 2015, 2016, 2017 haven't been rehired in oil and gas. None of this growth is based on oil and gas. It's based on a diversification away from oil and gas. And that's where we've seen a huge tech boom in Calgary. Calgary's economic development's bullish on city's prospects. An annual community report, Calgary has outpaced from a tech workforce standpoint everyone else in North America. Calgary is ranked in the global top 10 most attractive cities for workers. Here's reasons why they are. Highest proportion of STEM graduates of major Canadian cities. That's degrees in programs in science, technology, engineering, and mathematics. Calgary also has the youngest workforce in Canada. So you have these individuals that are getting trained in the degrees that are needed in the tech sector. It's home to 435 technology companies, 3/4 of those startups. And what can Calgary provide that no other city in Canada provide, or specifically the larger centers, is Alberta has the most favorable tax environment with the lowest corporate tax rates and no provincial sales tax. But on top of that, they have low cost office space. So what happened again in Alberta is when oil prices were high last time, you had a massive buildup of commercial real estate. Then everyone lost their jobs, and you have significant vacancy in office space in Calgary. And what does that do? It creates low cost office space. So it creates not only an affordable, Alberta is not only the best taxation environment for these companies to operate in, but they have the actual low cost physical office space that they can operate in. So office space in Calgary, if we compare it to Toronto, it's twice as much, and we compare it to Vancouver, it's 3 times as much as what it costs in Calgary to operate office space. So I can operate, my operational costs are much lower if I'm operating office space in Calgary. Plus, I have the highest proportion of STEM graduates and the lowest age workforce in Canada in Alberta. Wow, that's a great environment for me to be operating my company. Plus, combine that with the second lowest cost of living in North America, the employees are higher, can actually afford to live. They're happier. They're not making 6 figures and living on someone's couch like they may be in Toronto, Vancouver, or that classic story when you hear in San Francisco. And we'll talk about how I can be so confident about this in some future slides, because I've already seen this happen before. So I said that 3/4 of Calgary's 3/4 of the tech companies are startups. Well, these startups are hitting unicorn status. That means they're hitting billion-dollar valuations. Neo Financial, Shareworks, Benivity, Inveris, Parvis Therapeutics, all companies that were started in Calgary. And guess what? When these founders that started these companies, what do? When they hit their billion-dollar valuations, then they start investing into other startups in the area, their friends' startups. They have to put their capital somewhere, and then you have a snowball effect, and then you have more and more companies hitting it and making it in these areas. But it's not just the startups. We have Amazon. They opened a new cloud computing server hub, only the second in North America. Only the second in Canada. It's their Western hub. Their first one's in Montreal. 4.3 billion investment, 900 jobs. TELUS just opened a new TELUS Sky Tower, hiring 8,500 people in Alberta, $17 billion investment in their operations in the nation. And WestJet has now made their international connecting hub Calgary, a major investment into the Calgary International Airport. Only one of 4 true international airports in Canada, the other 3 being in Toronto, Montreal, Vancouver. Why is that relevant? Is that if I have a head office, I need an international airport. Why do I need an international airport? Because I need direct flights to get to and from where I need to go. That's why you'll only see international companies open head offices in 4 cities in Canada: Toronto, Montreal, Vancouver, and Calgary. And Calgary is the second most for head offices after Toronto. That making that the connecting hub, the Calgary International Airport, will lead to 1,000 direct jobs. All their 787 Dreamliners are to Calgary. And it's not just the tech sector as well. We're getting new manufacturing in plastics, manufacturing also in aircraft. So de Havilland, massive aircraft manufacturer, they build work planes. Not a household name. One of the specific types of planes they build is water bombers, which after this summer, one of the hottest on record and the most fires in Canada and around the world on record, are in very, very high demand. And they're moving their manufacturing facility from Toronto and relocating it into East Calgary, 1,500 acre facility with 1,500 jobs being built just outside of East Calgary. And that's a relocation. That means you're moving 1,500 jobs away from Toronto, 1,500 people away from Toronto, and you're moving them to Calgary. Right there, that's a net influx of 1,500 people away from the high-cost environment of Toronto to the low-cost environment of Calgary. Other international tech companies, Infosys, a huge Indian IT company, they chose to open their digital head office in Calgary, and they're doubling jobs from 500 to 1,000 in Calgary. Mphasis, they're another massive Indian IT company. They chose to open up in Toronto instead, sorry, not in Toronto, in Calgary versus other areas like Toronto, Montreal, or Vancouver. And they're adding 1,000 jobs in the next 2 years. SideTrade, an AI company, opened a new headquarters in downtown Calgary, 110 jobs. And then household names, TD Bank, opening their Western Canadian hub in downtown Calgary, 100 financial planners coming in. Calgary has the highest proportion of post-secondary educated people in Canada. RBC has opened a new innovation hub in Calgary, adding 300 jobs. IBM has opened a new innovation hub. They've added 250 jobs to Calgary. And I mentioned earlier, I'm very bullish, and I know this is going to happen because I've already seen it happen somewhere else. And I've seen this happen in the States. And what I mean, I've seen this happen in the States, I saw companies leaving high-cost environments like California, specifically Silicon Valley, and start moving to lower cost environments. And why are they doing that? And why are they moving away from, let's say, California and moving into a lower cost environment like Texas? They're fleeing high taxes. Well, what does Alberta have? Alberta has the lowest corporate tax rate in Canada. No, for us investors, no land transfer tax or development charges, and there's no provincial sales tax either. Compare that to Ontario, which is a higher corporate tax rate and a 7% provincial sales tax. That can lead to a significant savings. Also, expensive housing. It's very expensive for people to live and work in, let's say, an area like San Francisco, but they can afford to live in places like Houston or Austin, where we're seeing these companies relocate from. Again, when we compare that to Canada, Calgary is the second lowest cost of living out of all major Canadian cities and ninth lowest in North America. It's the low cost environment. So Alberta is our low cost environment, and then Calgary is the main draw for those, because if I'm an international company, I'm going to want to have my head office by an international airport, where Calgary is the only international airport. That's where we're going to see international companies and domestic companies move away from. Again, Toronto and Vancouver will still get still have their operations, but Calgary will start getting more and more operations moved there because of the affordability aspect. Again, we've seen it already happen. It's already played out in the States, and we're going to see it play out in Canada as well. Everything happens in the States first before it happens in Canada. Alberta is for us landlords, it's a pro-investment environment. No rent control, no foreign buyer tax, no land transfer tax, no provincial sales tax, no development charges, and they're committed to keeping their corporate tax rates low. They have a $10 billion stimulus package, including reducing corporate tax rates. And when I say the landlord, it's landlord friendly, not only is there no rent control, I have fixed term leases. That means at the end of 1 year, if you decide to sell your asset, I can tell the tenant to leave. Versus here, I can't do that. So if I'm selling a property, I'm selling the property with a tenant in the property while I'm trying to sell it, and that means I can't maximize the value of that property. Versus there, I can make sure the tenant is out of the property before I go to market that property for sale. If a tenant stops paying me in Calgary, I'm having issues with the tenant in Calgary, I can get them out of the property in 3 weeks. That same process will take 8 months to 12 months here in Ontario. It's a pro landlord environment and goes with their pro business philosophy. Now, we can talk about those more in questions, and you'll get more in the summary email as well, but I just wanted a very high level opportunities that we have. We have suburban condos which start at $350,000 and come with 2-year rental guarantees, 10% deposit structure. Those close in 2027. Downtown condos start for $475 with 2-year rental guarantees, 10% deposits closing in 2028. 4-bedroom townhomes starting at $535,000, 2-year rental guarantees, 10% deposits closing in 2026. And we have single family homes from $699. We actually have some under $600K in Chestermere, which is an executive suburban community outside of Calgary, and 15% deposit. And those are closing in 2025. Again, I could spend a whole nother seminar talking about every one of these opportunities and why they're great. But what I'll do is I'm going to include that information in the email that I send to you guys after, with the recording of this webinar. And then you can book a call so we can answer your questions intimately one-on-one. You'd be answering those questions with Kyle or Nisha, our wealth builders. Quick update on the Calgary market. Sorry, this is not May, it's August 2023. But we've seen the price of single family homes increase year over year by 10% to just under 700,000. Calgary townhomes, we've seen a 16% year over year price increase. Condos 14% year over year, and we've seen rents jump by nearly 25% year over year. And there's still significant room for those prices to grow when I compare them to the unaffordable markets like Toronto and Vancouver, and when I compare it to the salaries that people are making in Alberta and specifically Calgary. So here's all of our great faces. If you if you have any questions, please reach out to us. But what I'm going to do now,